Welcome to In Depth, a show that looks at mining developments in North America and South America. The top North American gold mining companies have reported glowing results for the second quarter, prompting dividend increases in some cases. Liz O'Hill, MiningWeek's deputy editor in North America, joins me to discuss these results. Welcome to the show, Liz.
Thanks, Martin.
What are the main themes to emerge from this round of quarterly results?
Well, the first gold companies up here in North America to report their results were the big three by market capitalization in North America and, in fact, the world as well. And that's Barrick Gold from Canada, Newmont in the US, and then Goldcorp out of Vancouver in Canada. And really the big theme that we've seen is that these companies are cashing in, pulling in big profits on the back of mainly the high gold price. As you know, the gold price reached its highest level ever in June, above $1,260. And in fact, in the second quarter, which is what they're reporting now, the gold price average for the quarter was almost $1,200. So these companies really are benefiting from the strong gold price. And not only that, but production as well in most cases is higher. Those three companies that I mentioned, Barrick, Newmont, and Goldcorp, all three actually have big new projects that are either ramping up or have just started production. Barrick's got its big Cortez Hills mine in Nevada, which is a big contributor towards production in the second quarter. Newmont has got the Boddington mine in Australia, which it's busy ramping up. It's been in production for a while. It's having some trouble there with the grades not being as expected, but it still is it's going to be a big flagship mine for the company. And then Goldcorp, another flagship mine, or new flagship mine, it's got its Peñasquito mine in Mexico, which in fact is expected to reach commercial production in this current quarter. So, and also if you look at other gold mining companies, even smaller ones, everyone really, or most companies are expected to report increased production. So they're benefiting from that. They're benefiting from the higher gold prices. And then also over the last couple of years, the companies have really, partly out of necessity, managed to get quite a good handle on controlling their costs, both for building new projects and for operating. And in fact, and that's really been able to help margins. The CEO of Goldcorp, Chuck Janez, one of the comments that he made was that the company's cash margin for the second quarter, I think it was $845. And he pointed out that in fact 18 months ago, just 18 months ago, that it was actually the range that the gold price itself was trading in. So that really helps put things in perspective of what a good position these companies find themselves in. And then, so the gold price is high, the production is high, the companies have got their costs, I don't know, well down is the right word, but they seem to be in control. And then finally, none of that would really be that exciting if they didn't have great exposure to the gold price. And towards the end of last year, generally the sector, as you know, has been de-hedging steadily as prices rise. But the big news towards the end of last year was that Barrick just slashed its big hedge book. And so now the good news for the sector, really, I think, is that the biggest company, the leader in the gold mining sector, is completely exposed to the gold price and able to benefit every move that the gold price makes, that kind of goes straight to Barrick's bottom line.
Do you think that we are going to see increased production as well going forward?
I do think so. You know, it's funny, the general consensus is that the production in the gold mining industry, the trend is at the moment really flat for the next couple of years, but eventually declining. But what you do see is that the mid-tier to and senior companies, and certainly in North America, they really are putting a lot of emphasis on making sure that they've got these projects in the profile. If you look at the big one, Barrick, it's building mega mines in South America. It's actually the Pueblo Viejo project, which it owns with Goldcorp, is well into construction. That's going to be a really big one in the Dominican Republic. It's building a giant mine actually on the border of Chile and Argentina, Pascua-Lama, and then it's also got its Cerro Casale mine, just kind of needing to get permitted, but really looking like Barrick's quite excited about it. And if you look at maybe actually Newmont is the company that, as far as the analysts are concerned, maybe doesn't have as an attractive gold growth profile as some of the others, but it does have projects waiting for approval in Ghana, in Peru, Also got a project in Canada. So, and of course, production increasing from Boddington. And then just the last one that I mentioned, Goldcorp, they've got projects in South America, they've got projects in Canada. So they also, I mean, Goldcorp actually has a target of increasing its production, or expects to increase its production by 50% towards by 2014. And then even after that, it's got projects that it expects to be kicking in. So, and as I said, also the smaller companies, you look at the Kinrosses, the Iron Golds, those companies, they also have got these projects moving through the ranks. So certainly the producers are doing reasonably well and making sure that they have sort of tomorrow and next decade's production being planned now.
Let us now talk about dividend payments. Who is increasing payouts and who is not?
Well, obviously, with the big bumper profits that the companies are pulling in, the shareholders would also like to have a bit of a bigger piece of the pie. So Barrick Gold announced with their quarterly results that what they've done is they've increased their dividend by 20%, and they've also actually moved from an annual dividend payment schedule to a quarterly payment. So Barrick's going to be paying 12 cents a share a quarter. Newmont was actually the first one to announce, or first of the big ones to announce, it's increased its dividend actually by 50%. Newmont's going to be paying 15 cents a share a quarter. And then as far as Goldcorp is concerned, you know, they're still building, or they have been building this giant Peñasquito mine. So CEO Chachanes, what he says is that the company really wants to first be net cash free generating before it looks at increasing payments to shareholders. But actually that's expected to happen towards the end of this year or early next year. So we can maybe expect to see announcement from Goldcorp then. And then as far as the other smaller companies are concerned, Agnico Eagle, that's been a really big growth play, or as far as production is concerned, certainly over the last 2 or 3 years. And their CEO has said, I mean, he's essentially said the company will expect to increase dividends when the board meets in December to discuss it. And then 2 other companies, sort of mid-tier companies, Centerra Gold and Eldorado Gold, actually in the last 3 months they announced their first dividend payment. So they've now started dividend payments. So overall, the sector certainly is increasing its payments to shareholders, and that is expected, or they're hoping that will mean a bump up in the share price and the performance of the gold sector shares in general.
Would you say that this gives us an idea of what the companies are expecting from the gold price?
Absolutely, at least as far as they say. They're saying that they expect to see the gold price rising. They're very confident in it. They say that the factors, the drivers, the macroeconomic factors that have been pushing the gold price higher really haven't gone away, and they're still in place. And really the general consensus, at least among the producers, who I suppose have a somewhat shaded view of the matter, but they say really the softness that we saw in the gold price in July was more than anything, at least just a seasonal reasons, and that so they expect to see the prices going higher as we move out of the summer months.
Let us now turn to corporate activity. There has been at least one big deal announced in this sector.
Yes, that's right. Kinross Gold, Toronto-based Kinross Gold, has just announced it's actually reached a friendly acquisition agreement to buy Redback Mining, based in Vancouver, but it's got 2 quite exciting mines, and one in particular, a mine in Mauritania, that really is seen as an attractive asset. They've increased resources and reserves quite amazingly since they've been exploring and in production already as well. And Redback's also got a mine in Ghana. So Kinross has agreed to buy it. There's a potential, the market sees there is a potential for a rival bid for Kinross, although the fact that it's a friendly agreement and they've agreed on breakup fees might deter potential bidders. And also Kinross is paying quite a decent price for Redback, so competitors might be reluctant to sweeten that. And then also there's also the outside chance that some analysts have suggested Kinross's shareholders themselves might actually vote down the acquisition because it's seen as quite a dilutive transaction. But if everything goes to plan, everyone approves it, the transaction is expected to close by the end of September, actually. As far as other transactions are concerned, I'm not really sure what we're going to see. But there was some talk about, this Australian company, Newcrest Mining, has made an offer for Lehigh Gold. It's based in Toronto. There was some talk that maybe one of the big North American producers might be interested, Newmont especially, since they are seen as maybe being in need of some growth, was bandied around, but it doesn't seem like nothing's going to come of that. In fact, Standard & Poor's this week, they lowered their rating or their recommendation on the ADSs of Lihia Gold. They lowered them down to hold from buy, essentially saying the reason for that is that they think it's unlikely that another bidder for Lihia Gold is going to come in and raise the stakes. So all in all, I think really the main factor in, I'm sure tomorrow will prove me wrong, but I think the main thing in the gold sectors at the moment is that the prices that they're getting for their gold is so high that it makes the assets themselves and the companies themselves more expensive, which can deter maybe potential suitors. And also the fact that a lot of the bigger companies at least really do have quite attractive projects themselves, which are cheaper to develop when you own them already. So that's another thing to look at.
Thank you, Lizo, for your time. That was Lizo Hill, our deputy editor, speaking to me from Toronto, Canada. Join me again next week, to discuss more news and insight on mining developments in North America. I'm Martin Joaquin in Johannesburg. Thank you.